Welcome to this deep dive. We're aiming to cut through some of the complexity today.
Sounds good.
If you're listening, you're probably navigating the specifics of financial year 2024-25. And we want to zero in on a really key area for many: income tax obligations in India for non-resident Indians.
Exactly. With FY 2024-25 wrapping up, it's definitely crucial for NRIs to get clear on their tax situation back in India.
And the good news is it's all online now, right?
Yes, the whole filing process is online, which is, a big help.
Yeah.
Makes things much more convenient.
Okay, so let's unpack this. Where do we start? The absolute first step, I guess.
Well, the fundamental piece really is determining your residential status at the end of FY 2024-25.
Right. That's not just a label, is it? It actually determines your tax liability.
Precisely. Your physical presence in India during that year classifies you. You'll either be a non-resident NR or resident but not ordinarily resident RNOR.
And figuring that out is step one,
Yeah.
because that status dictates what income India can tax.
Absolutely. That's the bedrock.
So let's talk about that taxable income then. For someone who's NR or RNR, what income actually gets taxed in India?
Okay, so the core idea is income that's earned in India or received in India. That's the main trigger.
Earned or received? Can you give some examples?
Sure. Think rental income from a flat you own in, say, Mumbai, or maybe capital gains if you sell shares listed on an Indian stock exchange.
Okay, income with a clear Indian link. Makes sense.
If the activity generating the income happened here or the money first landed in an Indian account, it's generally taxable for both NRs and RNRs.
Now, you mentioned RNR status. Is there a slight difference for them?
Yes, there's a specific nuance for RNRs. It's quite interesting, actually.
Go on.
Income earned outside India can also be taxed here if it comes from a business controlled from India or a profession set up in India.
So even if the money is earned overseas, if the business control or professional setup originated in India, an RNR might still pay tax on it here.
Exactly. That link back to India is key for RNRs in that specific situation.
Okay, that's a really important distinction. What about a common scenario, earning money abroad, then sending it to an NRE or NRO account in India? Is that transfer itself taxed?
Great question. No, the transfer itself isn't the taxable event if you're NR or RNOR.
Okay.
The key is where it was first earned or received. If you earned it abroad, just moving it to India later doesn't make it Indian income for tax purposes.
That clears up a lot, I think. Now, international finances often mean income could potentially be taxed twice, right? Once where you live, once in India.
That can definitely be a concern. But India has double taxation avoidance agreements, DTAAs, with many countries.
The tax treaties.
Exactly. These treaties are designed specifically to prevent double taxation. They might offer reduced tax rates or even exemptions on certain income types.
So checking if a DTAA applies between India and your country of residence is pretty crucial.
Definitely worth looking into if you're worried about being taxed twice on the same income.
Okay, so let's say our listener understands their residency status, knows what income is taxable. What's the next practical step for filing online for FY 2024-25?
Right. The next step is choosing the correct income tax return form, the ITR form.
And which one is it usually for NRIs?
For most NRIs, the ones with income like salary for work done in India, capital gains, maybe house property income, other sources like interest, but no active business or profession income in India. ITR2 is generally the one.
ITR2, okay. Anything specific to watch out for when filling that one?
Yes, there's a disclosure requirement if your total income in India for the year crosses INR 50 lakh.
50 lakh rupees, okay.
And you need to declare details of your assets located in India, movable, immovable, and any related liabilities.
Just the Indian assets, though.
Yes, that's a key point for NRs and RNRs. You don't need to disclose your foreign assets in this section of ITR2, only Indian ones if you cross that 50 lakh threshold.
Good to know. What if someone does have business or professional income from India? ITR2 wouldn't work then.
Correct. If you have active business or professional income generated within India, you'd likely need ITR3 or maybe ITR4, depending on the specifics of that income.
So the income source dictates the form. Makes sense. All right, got the form identified. What documents should people gather before they sit down to e-file for FY 2024-25?
Yeah, getting your documents ready first saves a lot of hassle. You'll want your tax information summary, the AIS annual information statement.
AIS gives quite a bit of detail, doesn't it?
It does. It captures many financial transactions. Then your TDS certificates, Form 16 if you had salary in India, Form 16A for other TDS deductions.
All right.
Also, Form 26 AS, your tax credit statement, bank statements are essential, and proof of any investments or contributions if you plan to claim deductions.
Right, for things like Section 80C, if applicable.
Yeah.
So, quite a checklist.
Having it all handy makes the online process much smoother.
Okay, documents ready, form selected. How does the actual e-filing work for FY 2024-25? Where do they go?
The official place is the Income Tax Department's portal, incometax.gov.ini portal.
Right, the main government site.
Yes. You'll need to log in or register if you haven't already, then find the option to file the income tax return. It's essentially filling out the chosen ITR form online.
Which involves entering all the details. Personal info, income breakdown.
Exactly. All income sources, any deductions you're claiming, details of taxes already paid like TDS or advance tax. You fill out the various schedules.
Seems straightforward if detailed.
Mm-hmm.
Once everything's filled in, is that it? Job done?
Almost. The final, very critical step is e-verification. It's like your digital signature.
How do you do that?
Several ways electronically. Aadhaar OTP is common, or net banking login. You can also generate an electronic verification code, an EVC, through your bank or DMAT account.
So mostly electronic options. Is there a non-electronic way?
Yes, there's the older method. Print the ITRV acknowledgement form, sign it physically, and mail it to the Central Processing Center, CPC, in Bangalore.
But is there a catch with mailing the ITRV?
There is, if it reaches the CPC more than 30 days after you uploaded your return. The date they receive it becomes your filing date, which could easily push you past the deadline and trigger late filing consequences.
Ah, okay, so e-verification is definitely the safer, faster bet, if possible.
Generally, yes. Much more immediate confirmation.
Good tip. Now, the big question, deadlines. What's the due date for filing for FY 2024-25?
The standard deadline is July 31st, following the financial year. So for FY 2024-25, that would normally be July 31st, 2025.
July 31st, 2025.
Yeah.
But always check for extensions.
Absolutely. Always keep an eye on the official announcements from the department. Things can sometimes change.
And what if someone misses that July 31st deadline? Is all lost?
Not entirely. You can file a belated return after the due date.
Okay.
The window for that usually extends to December 31st of the assessment year. So December 31st, 2025 for FY 2024-25.
And can you fix mistakes after filing?
Yes, you can also file a revised return to correct errors within that same time frame, up to December 31st, 2025.
But filing late, there are consequences, right? Like interest.
Yes. Filing a belated return often means you'll have to pay interest on any tax that was due.
Okay. What about refunds? If someone's paid too much tax through TDS, for example?
If you're due a refund, you claim it in your return. It's vital to have a pre-validated bank account linked on the portal.
Pre-validated, okay.
The department credits the refund directly to that validated account.
Mm-hmm.
And conversely, if you owe tax, you need to pay it, preferably before filing, to avoid interest charges on the payment delay.
Right. Pay first, then file if tax is due. Got it. Let's dig into those late filing consequences for FY 2024-25 a bit more. Why does meeting the deadline matter so much for NRIs?
Well, several reasons. Firstly, that interest we mentioned, it's under Section 234A.
Okay.
If tax is due and you file late, you pay simple interest at 1% per month or even part of a month on the outstanding tax. It starts accruing right after the due date.
1% per month. Even for a day's delay, you pay for the whole month.
Yes, that's how part of a month works. It can add up quickly.
Ouch. Are there other fees just for being late with the FY 2024-25 return?
Yes, there's a specific late filing fee under Section 234F.
How much is that?
Generally, it's INR 5,000 if you file after the July 31st deadline.
5,000 rupees.
But there's a small relief if your total income doesn't exceed INR 5 lakh. The fee is capped at INR 1,000.
Okay, a lower fee for lower income. What if someone's income is below the taxable limit anyway? Do they still pay the fee?
Good point. If your income is below the basic exemption limit and you weren't otherwise required to file, then no, this late filing fee typically doesn't apply.
Got it. So interest and fees are the direct financial hits. Any other downsides to filing late for FY 2024-25?
Yes, a potentially significant one is about carrying forward losses.
How does that work?
The tax laws let you carry forward certain losses, like capital losses or business losses, to offset against income in future years. It's a useful tax planning tool.
Right.
But if you file your return late after the due date, you might lose the right to carry forward some of these losses, especially capital losses and business losses.
Wow, so filing late could mean paying more tax in future years because you couldn't use those losses.
Exactly. It can have a lasting financial impact.
Are there sort of more serious consequences for just not filing at all or being persistently late?
Well, it's not common for typical delays, but yes, in cases of willful and prolonged failure to file, the Income Tax Act does have provisions for penalties and even prosecution. But that's usually reserved for more extreme cases of non-compliance.
Okay, so the clear message is file on time for FY 2024-25 if you possibly can. Avoid the interest, the fees, and keep your loss carry-forward options open.
That's the best approach, definitely.
All right, let's switch gears slightly. Advance tax. Is this something NRIs need to worry about for the current financial year, FY 2024-25?
Yes, absolutely. NRIs can be liable for advance tax, just like residents under certain conditions.
What are those conditions?
The main trigger is if your estimated total tax liability in India for the financial year after subtracting any TDS that will be deducted is expected to be INR 10,000 or more.
10,000 rupees or more in net tax payable. And this applies to income earned in India, like capital gains, rent, interest.
Correct. Any income earned or accrued in India that results in that level of net tax liability.
So how does an NRI figure this out? Do they need to estimate their income for FY 2024-25?
Yes, that's the process. You estimate your total taxable income in India for the year, calculate the tax on that using the applicable rates, subtract the estimated TDS. If that final number is 10,000 or more,
Then advance tax is due.
exactly. And it needs to be paid in installments during the financial year itself.
Okay, installments. Are there specific dates for FY 2024-25 we should mention?
Yes, there are set deadlines. For this financial year, by June 15th, 2024, you should pay at least 15% of the total estimated tax.
Okay, 15% by June 15th.
By September 15, 2024, cumulative payment should be 45%.
45% by December 15th.
By December 15, 2024, it's 75% cumulative.
75% by December 15th.
And finally, 100% of the estimated tax by March 15, 2025.
Right, the full amount by March 15th next year. Those dates are important for anyone potentially liable.
Very important to calendar them.
What if someone misses these dates or underpays an installment for FY 2024-25?
Similar to late filing, there's interest involved. Sections 234B and 234C of the Income Tax Act deal with interest for default or deferment in payment of advance tax.
So, more potential interest charges if you don't keep up with advance tax payments during the year.
Precisely. It's worth noting, though, that for many NRIs, TDS often covers a large part, maybe even all, of their Indian tax liability.
Right. If TDS on, say, interest income or capital gains is high enough.
Exactly. But if you calculate that your net tax liability, after all TDS, will still be over that INR 10,000 threshold for FY 2024-25, you really need to look into paying advance tax to avoid that interest.
So it requires a bit of proactive estimation and planning during the financial year itself.
It does. A careful estimate is key.
This has been incredibly useful, a really detailed deep dive into NRI tax obligations for FY 2024-25.
Glad to help clarify things.